Como esta mundo? All right, guys. What language?
Excellent. Nailed it. Oh, wow.
Portuguese.
Fun.
Oh, we switched mics. I'm sorry.
I would have guessed Portuguese
Say
as
something,
well.
Nizzle?
Portuguese.
Your mic one. Boom.
Boom.
Yeah,
Right.
We're in
crispy.
there. I hear myself.
Nailed it.
It's weird.
All
Is
right.
it Portuguese?
No, I
I
said
ain't guess.
fun.
That's not my guess.
Whoa, you already guessed.
No, I didn't.
All right, fine. Go
All
ahead.
right. Como esta mundo? Wow. Is it French?
Keep going, guys. Any final answer?
It sounds like como esta, so a derivative of Spain.
So it's a romance language. So
Is it Romanian?
no, the romance languages are like Italian,
Wrong region.
Spanish. Oh, wrong region. That's what it sounded like it was.
All right,
Ron
can I go?
region?
All right, we can't waste too much. We can't leave these people hanging too
Where
long.
is Ron region?
It's Filipino. Believe it or not.
Filipino.
I should have thought of that.
Como esta mundo?
Well, hey, welcome to the next episode of Help Me YPN. Today's topic, how to manage and work with high interest rates and other options on the home buying process. So many interest rates episodes for season 3. But hey, we're back. And before we get started, hey, shout out to Feedspot. Thank you so much for calling us the 3rd best podcast in Miami for real estate. We appreciate you. And for the rest of the people, find out who they are in the link below. But hey, we're coming for you. We're going to be number 1 just in about a year. So, hey, good playing. All right, so we also got to give a shout out to the AV Club. Thank you, Khalid, for
thank you.
always
The AV Club Studios.
the AV Club Studio.
Don Nizzle said that. You heard it?
Yeah, we
You
heard
heard it from Don Nizzle.
I obviously have not heard it. But and then hey, our final sponsor, YPN Global Congress. Oh my God, guys, we are going back
You
to
got to say YPN
Dubai.
Global Conference because you looked away from the mic when you said YPM and then you came back for Global Conference.
So it disappeared.
Yeah, this.
All right. Well, the logo popped up right there. We're not gonna go to
Okay.
And but thank you.
Of
Thank you. I'll
course.
keep it close.
Thank you.
Today's topic is how to manage and work with high interest rates and other options on the home buying process. So let's just get started. This is a free for all round. What options do buyers have to ease the rise of interest rates?
So I know Darnell would probably be the best suited to answer this first, but I just want to get out what I know before he comes in and kind of kills the game.
Go ahead.
So one thing I do know about high interest rates and ways to deal with it is you don't have to kind of live with that rate. So my big thing that I tell people is if you can afford that mortgage, if you are ready to buy a house, you have a lump sum saved up that's ready for a down payment and closing costs, and the mortgage amount that they present to you is within your means that you could comfortably pay for and live in. You love the house, by all means buy that house and understand that if and when mortgage rates do drop, you can refinance and just get that lower rate. So that's probably the biggest thing I like to tell people, that it's all on. If you're not ready, you're not ready. Don't feel obligated to buy a house right now. I don't want people to feel like if I didn't buy a house, I'm a failure, because that's the biggest misconception. But that's my take.
So, what are things buyers can do to ease the interest rates right now? There are a few things they can do, but I would say you absolutely need to start with your credit. Credit is pretty big. That's going to get you the best rate. It seems pretty simple, but not a lot of people choose not to think about that. For some reason.
That's true.
So definitely improve your credit. Make sure you have a great credit rating. Another thing that you can do is get more money to put down. So something that impacts your interest rate is going to be your debt to income ratio. So there are options. For example, if you have a 401k, you can take a loan against it to purchase a home. So you're not going to be penalized like you would if you were just pulling the cash out to go on vacation or buy a car or do other things. So typically all 401k programs are going to have some type of rule or stipulation in there that's going to allow you to borrow against it or take some of the cash out with little or no penalty for an X amount of time if it's going to be used towards the purchase of a home. So once you're financing less, or you have a lower debt to income ratio, then that's also going to help you get a lower interest rate. So those are, I would say, credit, and also seeing if you can pull a certain amount of cash out of your retirement accounts that you may have.
Nice. All right. So then let's flip it to sellers now. What incentives can sellers offer?
Natalie?
Oh, let's flip it
From
over
me.
to sellers now. What incentives can sellers offer?
Is that open? Okay, I'll take it. So for me, because I work with a good amount of sellers, so one thing we'll do is we'll offer to pay a percentage towards your closing costs, because you can only solve like one problem of the equation. So the problems of the equation usually are the interest rate, which is the monthly payment, the down payment, and ultimately just getting the offer accepted on the property. So I can handle two of those problems. I can handle the offer accepted on the property, and I can probably do something about your down payment. The monthly payment, that's going to be on you, but at least I can get you in the door. And some people, that's all they need. So if you're a seller and you're having a hard time getting your property sold, and you are already, you trust your agent, and your agent's presenting you with the comps, and the comps make sense, so it's not a pricing situation, one thing you can do is help open the range of buyers that can afford your property. I actually closed the deal on a condo that had a 20% requirement. The buyer didn't have 20%, but the offer made so much sense to the seller, he was willing to put in a percentage of their down payment to give them enough to close on it, and everyone's happy. Wow. So that's my take.
Another thing, depending on the seller, that they can offer as an incentive to buyers is they can hold a seller note, seller mortgage, or a second mortgage on the property as well.
I like that.
You got anything?
So I've never done this myself, but I'm wondering, can't the seller also buy down the interest rate for the buyer?
Yeah, I mean, if they give you a credit and you use that credit to put towards buying that, right? Yeah. That sounds like, because you were saying that earlier.
Because the
you
seller's
could buy down
not
your
paying
interest rate.
for it directly and paying the lender.
Right.
They would issue a credit to the buyer, and the buyer can utilize that however they want for any of their down payment, closing costs, their prepaids.
Nice.
And it's handled.
All right. So they're just saying, okay, so that's the seller, that's the buyer. So what can agents do now to help the situation?
Educate. I feel like we can just educate our buyers on what programs are out there, because, again, we can kind of let them know where the trends have been, where they're heading, and where they are projected to go. We can't really speculate too much. I can't tell you, oh yeah, the market's gonna stay stable and it's gonna increase year by year. I can't tell you that. I can tell you my opinion, but at the end of the day, all we can do is just kind of let people know what's out there and their options. And the biggest option that I've learned about is that the interest rate today is not gonna be the interest rate years from now, and you always have that. I can't say always, but in most cases, there's that option to refinance at some point, and you can get that lower interest rate. Do you think it's dangerous for me to keep saying that?
Yeah, I don't know if interest rates are going down anytime soon.
I can't say they're going down, but if they do,
I don't know. If you
we
really
don't know.
We don't know.
We don't know.
My crystal ball's broken.
It's broken.
Yeah.
Yeah. I never had one.
I
Yeah,
never had
but
one
nonetheless,
either.
that's the gamble you take. And honestly, if you're invested in anything, whether it be for income or for personal use, it's an investment, and any investment has its risk, and you be taking that risk. That's why the biggest thing that I can't stress enough is make sure whatever the price that the monthly price they're telling you today, you can afford it. Like, it's within your means, and you can do it comfortably and still live your life.
Yeah,
you don't want to shut it all down for this.
At the end of the day, you're building equity if you're able to afford the interest
if you're able
rate
to
versus
afford
rent.
it.
Yeah, 100%. I heard that there aren't going to be many extra rate increases, because if it goes any higher, it'll seriously wreck the commercial market. Do you agree, disagree? Speculation? I mean, how does let's just also go and do how interest rates now affect the commercial market.
Okay, boom. So briefly touching on it. So as far as the commercial market is mostly businesses, companies, corporations. Right. They're big on their numbers. So if the interest rates make it to where that their payments on the property alone takes a big chunk of their budget, it really reduces the likelihood that deal makes sense to them. And what does that do? It just reduces the buyer pool. It reduces the activity. And all that does is it affects the valuation. So that's all I can really say on that without,
Right.
I'm going to have to ask you to repeat the question for the third time.
Oh, you're fine. You're
it's
fine.
okay.
So, if there are interest rates, I heard that interest rates aren't going to be increased much more because of how the commercial market is at already. And, if it were to go up much higher, that it would really devastate the commercial market. Do you agree with that statement? And then overall, just how does interest rates affect the commercial market comparative to residential?
Well, the Fed is completely unpredictable right now. We never know what they're going to do, but it's definitely already impacted the commercial market. We definitely need to do one of these podcasts strictly on commercial. But what most people don't realize is that On the commercial loans, almost always the mortgage is an adjustable rate mortgage. So what does that mean? Depends on the terms that the borrower signed. It either could adjust in 3 years, 5 years, 7 years. Most of the time I see like a 5-year adjustable. And we're going to have, I believe, a major issue soon, because all of these notes that were done in the last 3 to 5 years, they're maturing. So that means the borrowers are going to have to refinance. You have to do a balloon payment and refinance. And now once you refinance at 7-8% now, when you purchase the property at 3%, 3.5%, 4%, it really throws off the numbers. So in the commercial world, we have what's called the debt service ratio, and it's going to throw the numbers out of whack. And for a lot of landlords, a lot of owners, in order for them to refinance, many of them are going to have to come to the closing table with cash out of pocket. So they're just going to have to many of them are just going to put their properties on the market. So there'll be definitely great opportunities in the very near future for anything commercial, whether that's multifamily, which is 5 homes or more, or five residences or more, or any retail, office, industrial property as well. So those are going to be affected majorly, and we're already starting to see some of that.
That makes a lot of sense.
So is this only on the lease side?
No, it's on the purchase side. So if you own a property and you bought it 4 years ago at a 3.5% interest rates, when the interest rates were at historic lows, and now you need to refinance at 8%, 8.5% now, because typically commercial properties, investment properties in general, whether it's a residential or like an office building, they're going to have a higher interest rate than if you're buying a property as a personal residence, right? So when they come to refinance, the numbers are going to be thrown off, because a 3, 4, 5% difference in interest rate literally can double the monthly payment. So where the numbers may have worked at 3 or 4% interest rate, they're not going to work with income that they're receiving now at an 8% interest rate. So if they're not able to get financing, the lender's going to, basically call back the note, and they're going to have to sell the property or give them the keys in lieu of foreclosure.
Yeah.
So they still have enough equity to sell and cash out in most cases, I believe, but they won't be able to refinance.
Got it.
Does that make sense?
Yeah.
Yeah, it makes perfect sense.
I don't even do commercial real estate, and it made sense to me. So that's good for me. So I can ask this next question then. What was it?
It's okay.
No. This is important. Oh yeah. So some people say with money, it's silly to keep it in the bank, and that you should be using it as a tool to make more money. But there is also another line of thought where you should have some cash on the sidelines. Would this be a good opportunity, let's say in a couple of years, to have that cash on the sidelines after we maybe see in the dip in the commercial market?
Yeah, I believe you definitely need to have some cash on the sidelines, but there are short-term options that you can use now. You can purchase treasury bonds, and you can get them in like 30, 60, 90-day increments. And I have friends that do that, where they'll split up their funds in 3, and they'll put one in an I bond or some type of treasury bond, and they'll have a 30-day, 90-day, 60-day maturity, and then they're constantly just recycling it, because once you do get that opportunity that comes across, you'll be able to liquidate it, but at least in the meantime, you're earning interest on it. Another option is basically every major credit card company right now has a high interest savings account, so like Amex, Capital One, a lot of those have 4 and 5% interest rates. So that's a better option than putting it in a CD, for example, where it's going to have a certain maturity of a year, 2 years, 5 year, 10 year. Whereas if you put it like an I bond or a treasury bond, it's basically guaranteed, it's secured, and you can pull it out in a much shorter period. So wow. I think that's the better option versus just keeping it in your bank, because you're literally losing money with inflation.
Right. No, for sure. But that's a very good point. But do you think there's going to be a tremendous buying opportunity within the next decade for commercial real estate after this kind of settles?
I mean, we're going to definitely see it well before a decade, like within the next 2 to 5 years, once these commercial notes mature.
Interesting.
I'm already kind of seeing it because I'm new to the commercial market.
Isn't it too early to buy right now, like based off of the kind of what I'm forecasting? Like,
I don't
honestly, think
my
so.
biggest standpoint is affordability. Can your lifestyle afford this asset looking at these numbers? Because
right now the answer is no for a lot of businesses.
yeah, but in like this income producing real estate, I'm giving you the numbers. Here's what it's rented for now. Here's what it makes now. Like, I can't tell you what it's gonna make next year or the year after, but this is what it's doing now. So we can make our projections based on that, based off last year, based on whatever the news is saying.
Yeah.
So I'm a big advocate of, I don't like for my clients to spend their every single dollar trying to buy a property for cash. I don't. If people call me saying, I have $200,000, find me a $200,000 property, let's buy it. I'm going to say, well, why don't you just use that? You got a pretty hefty down payment on kind of anything or kind of a good chunk of whatever you want. $200,000, you could go up to $1 million and that's 20%.
Listen,
you
I'm
know?
talking about buying commercial real estate.
Yeah, just the
That's
same.
way
If
more
it's
than
an income
20,000.
producing property, right. So that's the thing. Like, well, really, there's commercial properties you can get for $200,000, but the best use of your $200,000 would probably, speculation, I can't tell you where the market's gonna go or anything, but I would probably say put the $200,000 and make it 20% of $1 million, and you get that big asset, that big 8-unit apartment building. You get that.
Is this only in multifamily?
This is what I know because I did property management, so I can only talk about what I've experienced, and I just feel as though if you got 8 multifamily units, it's less likely that all 8 of them are gonna not pay you versus if you spent it getting 8 single families. That's 8 different roofs you got to replace. This 8 multifamily, that's one big roof. Just fix the one big roof. I'd rather do that. That's just, how I see it. But
yeah, I definitely want to touch on a couple of points you said there.
Please, yes.
It's going to be extremely difficult to purchase with 20% down on a commercial property unless you have like a portfolio and you've proven to the bank that it's performed. Usually you're going to have to put at least 30 to 40% down for commercial properties. And I always explain to my investor clients that want to buy like a single family home for investment, whether it's a long-term tenant or a short-term tenant, they want to do like a short-term rental, is instead of buying it in cash or putting 50-60% down, like let's try to leverage it a little bit. And I always try to push them to buy something with multiple doors. Like you were saying, if you have a single family property that's an investment and your tenant leaves while you're waiting for a new one, you're at 100% vacancy rate. Whereas if you have an 8-unit property and you're looking for a new tenant for 1 unit, you're only at a 12.5% vacancy rate. So it's still income producing. So that's always the best option, even if it's only a duplex or a triplex, a quadplex. It doesn't have to be a true commercial property which is 5 units or more. Just try to get multiple doors under one roof. It's easier to maintain, and you're not going to have 100% vacancy typically. Since we were at the commercial conference recently, we learned that a lot of the properties, especially the industrial properties, which have been the hottest properties these past few years, they are occupied by companies that had to get larger spaces due to the pandemic because of e-commerce exploded. But now that things are back to normal, they're not in much of demand anymore.
Yeah.
And a lot of these tenants, like we learned at the conference, gone are the days where you're having multiple offers on 100,000 square foot spaces. 50,000, which is still pretty large, is more common now. 50,000 square feet in the smaller industrial spaces as well. So I mean, we've already seen a shift when it comes to that with the large commercial properties.
Yeah, but what I've been learning was I've been doing commercial real estate for under a year. So in this short time, I've had 2 encounters with 2 different properties, 2 different sellers that were willing to seller finance, say 15 to 20% of the purchase price. Now, when you go to these commercial lenders, they want you to put down 20, 30, 35, maybe 40%. So it really helps the buyers when the seller's wanting to say, I'll finance 15 or 20, and the lender's saying, I just want 15, 20, 30, 40. Yeah. It's that much less the buyer has to bring to the table. So yes, there's 2 different notes going on, but if the numbers are there, if the numbers make sense, it just opens a lot more doors in the commercial world because there's just less people fighting over it than if it was a very nice 4-bedroom, 3-bedroom house on the water,
Yep. Seller financing is also great for sellers for multiple reasons.
Yeah.
Because maybe they're able to get more money that way. because they're able to earn interest on that.
Mm-hmm.
And for some reason, the buyer defaults and they get to get their property back, and on top of that, now they're not going to be, that's not tax advice, but they're not going to be subject to as much capital gains taxes, perhaps, because you don't have to pay capital gains taxes when there's a loan on the property. So like 1031 exchanges, for example, or seller finance properties, it's a loan, so it's not like they earned all that income in that, tax year. So it also helps defer taxes for the sellers as well. So, it's a win-win for everybody.
That's good information. I didn't know that. That's good to know. Thank you.
So that's a little off topic here. So it's kind of like when your investor buys a property and they buy it for cash and then they stabilize it and then they do a cash out refinance and they pull out 60, 70, 80% as a loan and they purchase another property and they keep on doing that because the money that you take out from the loan is not taxable. It's not income. It's a loan. You're paying the loan back, so it's not taxable. So that's what all the mega wealthy people do, the Trumps, the Kushners.
Why there's so many
all the big property owners. They're constantly doing 1031 exchanges for that, or they're just doing a cash out refinance once they buy, a distressed property or even a non-distressed property after a year or two. Once they increase the equity, they pull as much cash out. And we all have heard of the Burr method, right?
Yeah.
That's exactly what you're doing. Like if you do it correctly, you can get 100% of your investment back if you increase the value, and now you have a property that has a note on it, it's cash flowing, and then you go do it again and keep on redoing it. And now you're not paying taxes on it because it's not income, it's a loan. It's proceeds from a loan.
Yeah, and just to say, if people don't know what the Burr method is, it's buy, renovate, rehab. No, what is it? Buy, renovate, rent, repeat. What does Burr stand for?
Something like that. That's
buy, rehab, rent, repeat.
I don't know
buy,
which order.
Fix it, rent it out, do it again.
Refinance is in there.
Refinance. That's the other bar. There's another R in there.
It's like 4 R's.
Because you refinance and they give you some of that money back that you put down.
Or hopefully all of it
into
if you purchased it correctly.
If you purchased it correctly by having a good agent that understands comps.
Yep.
Yes. Wonderful. Good tips.
Yeah. I'm glad we switched to commercial. This is way more entertaining.
I like commercial.
Yeah.
I like commercial.
This is great.
Yeah. 100%. I had a point, but I forgot it.
Yeah. What do you think about commercial real estate?
You like commercial?
I cannot speak to commercial.
Yeah.
But you like
I
it.
always refer it out.
Yeah.
Yeah, I don't know much about it. I have a great team that I do usually refer all my deals to, and I did close one of my first referrals for commercial
Whoa. Hell yeah.
last year.
That's awesome.
Which was awesome.
That's good.
Yeah.
That is good.
great. Okay.
So, shameless plug, and it's not even for Miami YPN, it's for Miami Commercial. They have a certificate program. You guys can take it at the association. It's multiple things that you got to do. You got to go to the commercial conference. That's one of the requirements.
RE Bar Camp is a requirement.
Is it a requirement on that
RE
commercials?
Bar Camp is a requirement. Yeah.
They put that on there.
It's on there.
That's an honor, guys.
Yeah.
That's
RE Bar
that's
Camp.
legit.
You gotta go to RE Bar Camp. Yeah.
Yeah. And we'll have some fun news about an RE Bar Camp. I think at the beginning of the year.
I
too.
liked RE Bar Camp. That was my first one, and I want to do it again.
Yeah, we'll get ready.
I was a little
It's
sad I didn't get a
happening.
name tag.
It's gonna happen again soon.
Yeah, but nonetheless, commercial real estate is where I'm trying to focus, and I just wanted to plug that in.
No, I'm glad we talked about it. If I did another podcast in the span of 6 hours of all about rates and houses, I was gonna die, man. So I'm glad we changed
Yeah,
lanes.
it's a nice switch.
It did commercial.
Shout out to Darnell.
Also, you have to change your mindset. You're not going to try to do it. You are going to do it.
I'm doing it.
Heck
Oh yeah.
yeah.
That was my point. Thank you, Darnell. That was my point. I signed up for the commercial certificate. I took some commercial classes, and with that new knowledge, I made some videos, and I told my clients, and sure enough, I got offers out on commercial deals right now.
Cool.
I don't have one executed, but at least I'm putting out letters
you're
of
in the game.
intent. Right, I'm in the game.
Yeah.
So.
Hey, whoa. So let's talk about letters
Dealy?
of intent real quick. Have you tried Dealy? You just said it too, right?
Yeah. No,
Has
that's
anybody
where
played
you're
with
going.
Dealy yet? What's
Not yet.
I've seen
what's
it.
the
I
word?
didn't sign up yet.
I might be doing it on Monday. I had a client see a property today in Tampa.
Okay.
They love it. I'm going to show them one more
That's cool.
on Monday, and I should be putting in the letter of intent.
Cool. So you're gonna do it with Dealy?
I'm going to check it out. You
Okay.
know, it's a resource that our board provides, so why not check it out?
I want to check.
Yeah,
it
yeah.
out.
And Gavin's a pretty cool guy. Actually, he wants to get more involved with YPN. Maybe by the time this episode drops, he'll be chilling with us more. We'll see.
I like the presentation.
Yeah.
At the commercial conference, that was
Yeah,
a
it was
good
good.
presentation.
It was good.
You were there. Darnell was there.
I was there.
Darnell was there.
Yeah. Any comments about the commercial conference before we close?
It was great. I loved it. It was so informational.
When I got there, it was at Parrot Jungle Island.
Yeah.
I was expecting to see parrots. I'm not gonna lie.
Yeah, I think we just didn't go deep enough into the jungle, my man. They're there. we did not go deep enough into the jungle.
I just wanted to say that.
Yeah, but listen.
I asked Danya, I was like, do we see parrots after this? Do we go through the jungle?
Yeah.
She's like, I
We
mean, if
should.
you want, we could get tickets. So
We
like,
should
get
go.
tickets.
No, like get tickets.
We're
No,
already
they're
there.
like,
That's
for
what I was
free.
paying
Yeah,
for,
you know how
you know?
much we probably dropped on that venue anyway.
Yeah, they
Conference
could've
is
let us
over. Let's
in.
go hang out with the parrots now.
No,
They could have brought two
no,
over
guys,
for photos.
We
This-
already there. We paid to be here.
Where-
We got just let us in.
All right, so this is what we're gonna do next year. I'm gonna
and we paid the park.
I'm gonna
Hey.
wish this in existence.
Yeah.
So after the commercial conference next year, which I would imagine will also be held at Jungle Island,
Let us in the
Yes.
jungle.
we are going in the jungle for free.
for free.
For
no,
free.
we paid.
Yeah,
we
we
paid.
paid.
We paid. We all had
And
to be there.
we'll do commercial recaps of the Congress or the
Yeah.
conference in the jungle.
Exactly.
Yes, I
It'll-
mean,
Ari Barcap should be at Parrot Jungle Island, and it's
It
like
will
we'll
be.
talk about
No,
commercial with the
headquarters.
lemurs. We'll talk about we'll talk about open houses
actually
in
really
the
good.
flamingo
Guys,
garden.
it's
Like,
too
come
hot.
on, like like
I'm gonna see if they'll allow me to mention it at
Yes.
at the next commercial
I will vouch
meeting
for you.
November 1st because
I'm
I'm
voting.
I'm a YPN liaison. I'm not on the board, but I mean I think I can mention it's one of the board members.
please.
Yeah, all right.
Can we get some admission to Jungle Island?
Darnell 2024.
All right, yeah.
Darnell, we
Yeah,
voting.
about that.
All right.
Yeah.
So okay, cool. So what was one of your favorite tips from commercial before we roll out? Because you said it was super informational. So just give us one note.
I
that you're
mean,
like,
commercial
whoa.
tips in general, not necessarily from the conference, is I always get a lot of agents that want to work with me on commercial deals. And honestly, if you've never done a commercial deal, there's really not much that you can contribute. So what I would say is anyone that wants to get into commercial is go to all of the wonderful classes that our board offers and take any classes online with CCIM or IBBA. There's lots of places where you can get information these days. So just educate yourself and learn the terminology, because if you're trying to work a commercial deal as a residential agent because you don't want to refer it out and you want to learn it, immediately the commercial agents know that you're a residential agent just by the questions you ask and the terminology that you use. And, unfortunately, they don't take you as serious, and they're not as responsive when they hear that, because that they know that it's their responsibility to essentially do the entire transaction.
Wow.
So just, get a better education. The board offers so many classes. We're the only board in the nation that offers 4,000 different classes and trainings throughout the year, and there are many of them that are commercial as well. So
Yeah.
just go ahead and look at the calendar, pay the $75 a year
75?
to join the commercial board, and just go to all the classes that your board offers and all the classes that, depending on which brokerage you're with, it's going to offer as well.
That's a good point. Yeah, you should also leverage your broker too, because I'm sure there's some great resources there in some instances. Wow. Well, hey, you want to talk about your favorite thing that you learned from the commercial conference?
Sure, yeah. So the biggest thing I took from, I can't remember who said it, but there was a panel and one person said commercial follows residential. So if your client is thinking about doing a commercial deal and there's not much residential or residential activity around it, maybe look for a deal with more density. That's what he said. Density. Darnell was there. Density. So you want to make sure you're following density, and it just makes so much sense to me.
Really nice. Well, I'm
Thank
glad we
you.
were all able to spend time together at the commercial conference, and can't wait for next year and what you guys do with commercial with YPN going forward. We're going to continue to enhance that relationship in 2024. So I'm excited to see where things go. And I'll make one more announcement. YPN's Ari Bar Camp is going to take place at Miami HQ, the brand new one, whenever it's ready. So we're really excited for that as well, and we might have a few other surprises for January and February besides the YPN Global Congress. This is a really amazing moment right here. It is 1:05 a.m. where we're at right now. You're looking at the realest G's in the building. A lot of us went through every single podcast. My man Khalid, thank you for hanging through the end.
It's okay.
And
I'm here.
providing the AV Club studio.
Studio.
Finally, the last time I said I finally got it.
Yeah, you got it.
Hi, Mom, I made it. So be sure to hit up Khalid if you ever want to use this space. It's really a great time, and if you get the right people in the room, it is really a magical experience. This season 3 was for our ambassadors who couldn't hang till the end, but hey, they had some great episodes before this. And if you were interested in becoming part of the ambassador program, all you got to do is go to miamirealtors.com/YPN Pro. When that happens, I, Kevin Percelli, am going to send you a link to join the ambassador program. But it's up to you whether you click it or not. And either way is cool. If you want the most inclusive experience to see what leadership is like, there's no other program in the nation like it, really. We're going to give you quarterly board meetings. You're going to be in a chat. And a whole lot of other opportunities to see what leadership is like. And just to make it clear, we're looking to bring leadership through the ambassador program. So if you're really looking to get on the board of directors one day, like my two really good friends right here, you know what to do. It is a test. So if you're really bad at communication via email, you're probably not going to make it in. So just when you see me, just take it seriously. And I promise it'll be worth your time. It's only $50 to join YPN Pro. And we'll see you on the finish line in the winner's circle, y'all. Peace out. See you later.
Take classes.
I'm a YPN leader. Of course I'm going to be on my laptop.
I'm a YPN leader. Of course I have a full purse. I'm a YPN leader. Of course I'm eating before I leave.
I'm a YPN leader. Of course I'm sneaking out for shopping.
We're YPN leaders.
Of course we're going to be creating content.
I'm a YPN leader. Of course I'm signing up for classes.
I'm a YPN leader. Of course I'm Cafecito obsessed.
I'm a YPN leader. Of course I'm going to crash the next happy hour.
If I'm on my way home, yeah. Wouldn't it be crazy? But you still amaze me. Wouldn't it be crazy? But you still amaze me. Wouldn't it be crazy? But you still amaze me. Wouldn't it be crazy? But you still amaze me. If I'm on my way home, yeah. If I'm on my way home, yeah. Wouldn't it be crazy? But you still amaze me. Wouldn't it be crazy? But you still amaze me. Wouldn't it be crazy? But you still amaze me. Wouldn't it be crazy? But you still amaze me.